Hello, retail traders. This is Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Let me shut this volume down. Got my alerts going off. So we're going to talk about the indices right now and what I expect for the next couple of weeks, maybe 3 weeks in the market. Actually, it may be a couple months, maybe a whole quarter until the election's over. And then we'll find out from there. But right now, the market anticipates waiting for the Fed. It's all responsible. They're putting it all up on the Fed, and they're getting nasty now. They're bringing out the emergency rate cut. Are you serious? On a simple Black Monday this could happen again, but it could also trigger a stronger pullback. A little bit of weakness. You're hearing that through the jabbers and the talks on Wall Street. Recession coming, spending's dropping, Airbnb, you're hearing it in the earnings. You're hearing it in the earnings. So we're going to, I'm not bullish at all, but I am scalping. Today I called the perfect put. I got out of it way too soon and I started trading calls, and that's where I screwed up. I should have just stuck with them puts, or even that one put all day long. That'd have been 300%, 400% gainer. Plus, I played the SPX, and I scalped, and I did this, and it was a good day. But still, yes, I took a loss on one ticker, and that don't make me very happy. So we're going to go ahead and get into the SPY. I want to look at the SPY, and I've got this up on the weekly time frame. I think that's all I need to look at right now. We broke a major moving average this week, which was the 21 EMA. And I think the next one we're going to touch down here could be a double bottom. A double bottom right down here, right around the $500 mark. I've got an alert set right above 500. That's going to be my psychological number for maybe a consistent rebound in the trade. For a couple of days. It's not over with yet. I expect more volatility. I really can't stand the candidates for the Democratic Party. I'm not into socialism and identity politics, where the government picks who does better compared working your own self up and making the best out of yourself. So to me, that's kind of racist. And I just going to have a hard time. I'll probably end up closing my business down and figuring out something else. It'd probably not work anymore. I love to work, but I'm getting to that age. So the SPY, we've got the 50 SMA and the 63. That's going to be your solid support for now, and we need that to hold. If that doesn't hold, we could cave on down to the 200 SMA. With socialism, we could easily do that. So let's see if we can hold that 500 on the SPY. Now the SPX, we got 5,200 was the number to hold, and that didn't hold. Let me see if I got this. Hold on here a second. So these are like the support that I had on this here chart. This is the daily, and I got a 52 negative dealer pressure level right around the 5,200. So that needs to hold. If that doesn't hold, the pivot point is going to be right around 5,250. Though you're looking at this as long. If it wanted to rebound, and then the 5,300. But that 5,200 is the most important one that we need to hold right now. And you can see we did close under that 5,200, 51.99.50. So I'm seeing this stock also drop down to this double bottom right down here where we had these three black crows, maybe a little bit higher, right around that $5,000 level. That $5,000 level was a very important number when we broke it. at the first of the year. Remember that. They kept saying 5,000, 5,000's a target, 5,000's a target, and then we broke it. So we can easily come back and retouch that 5,000. I talk about this strategy all the time. So the SPX, I'm looking for at least 496501 with a $5,000 target. QQQ. QQQ hit the 50 SMA. Let me see if I can erase this. So we had 3 black crows on the weekly. We had 3 weeks of solid selling, 3 black crows, and we didn't get a reversal on that 3rd crow. So that was very bearish to me this week. We did pull back and hit the 50. Now it's solid support. 50 SMA on the weekly time frame. Now we do have a confirmation down here of the, right here at this previous high, and I'm going to go to the top of that wick. I got to come up here. I feel vindicated because I called the bubble out. No one else had the guts to do that, but I did. Because this thing was irrational. I've seen nothing like this run in 20 years. Okay, this was definitely a pump and dump by the fat cats. So we got the 50 SMA. We could get some positivity, maybe some rebounds on the 50 here on the weekly. But our strong support is going to be definitely down here at this previous high, right around 409.44. That's going to be solid, I think. We'll just if we hold that, we'll still stay bullish. If not, we could easily drop that and drop down here to the 200 SMA. This is an inverted hammer. I mean, this can go either way. We could start to reverse back up and fill this hammer gap. So that would be my resistance if I was to trade this stock. And I got in it down here and we started having a couple, 2 or 3 good days. And that resistance level is going to be right there at 446.07. I'm using a trend line. This went on for 2 months. And then we broke down. So we could easily come up here and find a hard resistance off that failure. It did eventually come back down, went to the previous support level, and then bounced back up. We failed this support level, so the next one is definitely right down here at this double bottom. I'm going to put an alert right on the bottom of that candle, that green candle. $418.19. Mark at below. Okay, so in summary, we had 3 black crows. It failed. The 9 could cross the 21. The 9 EMA could cross the 21 and apply pressure to this thing to push it down to the 200. But for right now, we got to see if we can hold this support at 409.44 and 418.19. Write these down on paper. Then we got the IWM. I try to make it as simple. That's a clean chart, right? I ain't using any indicators but my moving averages. I'm not using no Bollinger Band. I'm not using the RSI. They're all lagging indicators. They're lagging. I'm using candlesticks. I'm using moving averages. Them ain't lagging. So we got the IWM. They were pumping this shit out of the Russell. They were wanting this market to bleed out of that artificial run that we had on AI. They're using psychology on you, and they wanted to put it mid caps. Mid caps to me is a risky trade. It's a risky trade on behalf that we're in. I had a guy on here and analyzing the stocks, and he says, we're not in a war. And I said, what the we're not in a war? We're funding two of them. We gave terrorists $250 billion in Iran. We're not funding a war? You got to be nuts. We're in a war. So I'm literally of that. I got to be defensive. I don't know what's going to happen over here in Israel, if somebody's going to get nuked, because the market will have a knee-jerk reaction to that too. So IWM, but they were wanting to move this over into the small caps, and I'm not doing it. I'm not falling for that. I'll just take them out and scalp. JP Morgan comes out and makes fun of the retail trader today. Says retail traders suck. They all got scared and jumped out on Black Monday. I didn't. That was a buying opportunity if I ever saw one. Man, I jumped in that shit. You could have picked anything on the board and made money on it. So here's the IWM. We've got the weekly. We're definitely pulled back to the 200 SMA. I like that. I like that a lot. That could be a solid support to maybe do some scalping on this thing tomorrow. We're going to put a low support on this baby right here at 197.19. If this thing comes back and retraces at 197.19 and holds, that's a pivot point on the weekly time frame. This also, the way they pumped this Russell, CNBC pisses me off. So we got to hold that 200 at 197.19. If that doesn't hold, we're starting to get tight down here. You know what I mean, Sal? So we got a 1, 2, 3 support, and that's where we're going to set our alert. I'm going to be straightforward with you. I might be wrong. I might be an idiot. I might be delusional. I might be a little bit crazy. But I've been at this market for 20 years every day, and I'm not going to have some institutional buyer to tell me to buy a trade at a triple top at an all-time high when it's already up 800-900%. So 197.19 needs to hold. If not, we could drop down easily to that lower 90 area, 192.41. But I'll have this on watch. I don't trade the IWM that much. I trade the SPY and the SPX. I'm a lot more comfortable trading them too than I am the QQQ and the IWM. But I have them on watch and I have them on a list. And this determines how I want to take the trade every day. And today I called the perfect put. I mean, I'm kind of upset that I didn't hold these puts. My mind was more in I don't know. I made some money. I got out. I was up like $500, and I got out of the trade, and I could have been a $5,000. So that's that. And that was a big mistake on my behalf today. But I still came out real green. It was a tough day. My adrenaline was up, man. I was beating it. I was hitting the washboard. I was singing. I was put on the bear mask. It was a good day. So I want to wish everybody a great day. Just remember that we're watching them IWM, the QQQ, the SPY, and the SPX, and This is the sneaky snake trading strategy. We're going to have okay, let me sum it up. We're going to have a volatile market until the Fed comes back out or we get an emergency rate cut. But we've also got, I've called this pullback. I said it's an election year. I said it's time to go ahead and, like Buffett the other day, I was way before him. He was a little too late. He was a little too late because I timed this election thing just perfect. I can't see, I just don't want Kamala in there. I'll live with it, but God. Sick and tired of becoming a racist because I'm white by a liberal when I don't really give a crap. So we're going to have some volatility until the Fed, until the election's over, and then we're going to see what happens then. We could still have some moves up to the upside. We still probably will have some. These fat cats are relentless on Wall Street. They're upset because the market's down right now. Oh, they're saying they came out and said 6 rate cuts at the first of the year. That didn't happen. They're behind the curve. The Fed is behind the curve. So let's get on top of the curve. Yeah, I'll have a great day. We'll see you tomorrow. Sneaky snake trading strategy, where I try to talk chart patterns, moving averages, and being in the now.